Hi everyone, it's Michael Kramer of Mach Capital. Today is Tuesday, October 7th, and it's around 4:30 New York time. So from an economic data standpoint, the U.S. government is still shut down, and so therefore we're still not getting any economic data that comes from the government. And so there's not really much to review when it comes to that, although there will be a 10-year Treasury note auction on Wednesday, October 8th at 1 p.m. Eastern. There'll also be a 30-year bond auction on Thursday, October 9th at 1 p.m. Eastern. And basically, we're just left with the University of Michigan sentiment readings on Friday, October 10th at 10 a.m. And so until we come back, until the government reopens, we're going to be waiting on data. So that means to this point, we've gotten no job report, and it's probably highly likely that next week we won't be getting any inflation data either. So if we just move in to the euro, there's not much happening here yet, although it's a very good chance there may be something happening here soon. There's obviously lots of different things going on across Europe right now, and the instability in France has certainly had a hand in that. Additionally, right now we're looking at a euro that's showing signs of further weakening, at least on the RSI. You can see we're making a lower low, so momentum clearly broke. We were kind of holding it nice and strong around this 47.50 area. That's clearly broken. We're now down around 43.5, and right now we're just waiting to see if the euro can slice through this support area around 116.50. If that happens, it's going to set up a much stronger, a much bigger test of support at 115.90. That you can see is a much stronger level of support, and if that breaks, that's really where you can start seeing the euro slide potentially back towards 114. And, you can make an argument there's obviously been a broken uptrend. It clearly looks like the euro is in some sort of downtrend right now. And it is possible, if you draw in a horizontal line across this bottom, and this one, we're forming what looks to be a descending triangle. And if it is a descending triangle, then we would expect that the next move be lower in the euro, potentially breaking support at 15.90 and heading towards 114. The saving, and we've also even seen the 10-day exponential moving and the 20-day simple moving average turn lower as well. Basically, at this point, if the euro can manage to get above this trend line, and then also manage to surpass these two levels of these two moving averages, then you could perhaps see the euro move back towards 117.5 or so. Right now, that's looking like a pretty hard setup given the amount of resistance that's currently there. When we look at the pound, it's a similar setup, but it looks a little bit better at least. There's clearly not really a downtrend. There's really just more of a lot of chopping. At this point, what we're kind of keeping an eye on here is this negative momentum. And for the pound, again, you can also see we're below the moving averages. Basically at this point, when you look at the euro and when you look at the yen, which we'll be reviewing in a minute, it's looking like the dollar is really setting up for a reversal and a continued strengthening. And so if that's the case, then it's likely that the pound is going to go along and weaken as well. Certainly there's lots of things going on in Britain from a budgetary standpoint, and certainly we've seen that reflected in higher rates there. And so again, a weaker pound would certainly go along with any sort of concerns we're seeing from that standpoint. And right now, a break of this 134.20 area sets up a move toward 133. And then after that, we're talking about potentially coming down to 131. Again, momentum is clearly very bearish here. And at this point, it's looking like momentum favors further downside. When we swing over to the Japanese yen, there's obviously been a very big move. There's lots of concerns now about the new prime minister who's potentially coming in. She's much more of a fiscal dove, and that's potentially going to send rates higher, which it's already done, and also potentially continue to weaken the yen versus the dollar. And for the most part, that's what we've seen so far. We've actually seen the yen manage to break above this 151 area, and right now it looks like we're heading towards this 153 region, which would take us right along this upper trend line. And also when we look, we can see the Bollinger Band. We're slightly above it, but you can see the RSI still below 70. So it's possible here we just continue to kind of grind higher towards resistance before maybe getting to a point where we just stall out and consolidate. At least when we look at it from this standpoint, it certainly seems like there could be a potential consolidation somewhere in this 153 to 154 area. When we move over to gold, I mean, what can I say? It continues to move up. I mean, clearly the trend is your friend. But again, as I even spoke about last week, gold is extremely overbought at this point, and I think it was around here we were looking for it to maybe consolidate for a couple of days, and it certainly has done that, and it's just continuing to be in these overbought conditions. Right now the RSI is up to 84, 85. You can see we're trending lighter along the upper band on the daily. When you look at the weekly, it's well above the upper Bollinger Band now. RSI up at 81.5. When we move over to the monthly, it's a new month, so the RSI is now up to 91, and we're well above the upper band. And so, I mean, when we look at gold from a daily, weekly, and monthly chart, it tells us that, gold is very overbought at this point, and I've been saying that now for probably 2 weeks, and so that doesn't really help very much because gold hasn't come down. But it looks to me like right now the gold is just using the 10-day exponential moving average as support. So I would probably say that gold, the trend is your friend, but if you see gold break below the 10-day exponential moving average, that's probably a sign that you're going to get some sort of drawdown or some sort of reversal. If you do break that, I would look for support then at the 20-day moving average. And if that were to break, I would be looking for support at 36.50. But other than that, gold obviously has been very overbought now for the past couple of weeks. We've seen some nice consolidation followed by another leg higher, and that seems like we're kind of positioned again for some consolidation, maybe at a chance at gold turning lower. But again, until you break the 10-day exponential moving average, I don't think you can be too bearish on gold. When we look at Brent oil, Brent has managed to survive another week, holding on to the $66 a barrel level. You can see we came down through the lower Bollinger Band. We kind of bounced back off of it. Right now, we're still below the 20-day simple moving and the 10-day exponential moving averages. I would probably, again, kind of think about this area right around this 65.5 region as support. It's possible that, we continue to hold in this area, but, if you take out these lows here around 64.5, then we're talking about maybe moving back towards 62 and maybe testing this low around 58. But on the other side, if we can get above these moving averages, then 69.70 certainly seems viable. It's just that it's not really doing very much at this point. And really, until we get some sort of better clue on a trend, then it seems like you might just be spinning your wheels with oil because it doesn't have any sense of direction. It just seems to be trading sideways, and it's been doing that since August. And even the momentum indicator is really not giving us much of a clue either. So it might be just best to watch this for some time until we can get a better feel for which way it's most likely to go. The DAX is certainly interesting, and it's like every time it gets to this 23,300, 400 area, it finds new life and magically bounces back. And it looked pretty weak towards the end of September, and then magically it got a big 1% move on October 1st, and it got another big 1.3% move on October 2nd, and now it's gone kind of nothing for the last 3 days. So it seems like there's some pretty strong resistance up at this 24,500 area. Right now we're setting up what could be, I guess, a potential quadruple top. Really aren't quadruple tops that you see very often. And so that kind of tells us that, the more times we test this upper level of resistance, the more likely it is that we're going to break out. You can also see here from a momentum standpoint that we have managed to get above the downtrend that formed in the RSI in a pretty meaningful way. And so it's quite possible right now that the DAX is consolidating and getting itself together for a potential another move up, potentially taking out these highs and then moving a little beyond that before maybe it sets up something else. But again, this has been a really tough level of resistance. So if you get the break above it at 24.5, then you're talking about potentially moving much higher from there. But if we aren't able to, then I think there's a really good possibility that you not only come back to 23,400, but probably break it, because again, the more times you test support and resistance, the more likely it is that you're going to break it at some point. But again, being that the DAX is at the upper end, you would probably right now be looking for some sort of break higher. If that reverts lower, then we would be looking for a move lower. The FTSE has managed to break out as well. You can clearly see we're nice momentum here. We have, we're sitting right now at the upper end of the Bollinger Band. We're just barely overbought. So it looks like maybe we're in a period here where we can consolidate for a little. Maybe we even come back and we test the 20-day moving the 10-day exponential moving average. It does look like, though, this looks like a pretty clean breakout after consolidating and failing a couple of times at 9,300. So again, I would probably think that as long as we continue to remain above the 10-day exponential moving average, and then that exponential moving average is moving higher, then it seems more likely than not that the FTSE is going to continue to extend. And also, I mean, I think it's worth pointing out that as long as copper and gold and a lot of these metal prices are doing well, it's likely that you're going to see the FTSE continue to extend, because that's what we've seen happen in the past. And right now, copper is still trending higher. It's recovering from that big decline. So if we see copper or gold or any of these metals really start reversing, that would probably be a sign too to also get a little more cautious on the FTSE. When we look at the NASDAQ today, we put in a bearish engulfing candle. It doesn't really mean very much at this point, because again, the NASDAQ and the S&P, for that part, haven't really been able to get below their 20-day moving average for more than a day or two. And so what that kind of means to me is that it's possible we can maybe come back down to and test the 20-day moving average. But until we see some sort of break, and we've been fooled before, because this was obviously a decisive break below the 20-day moving average, and it didn't really matter because we snapped back really quickly. So again, the only thing here is that you are seeing a bearish divergence forming on the RSI, clearly with the trending down while the NASDAQ is moving up. You are also seeing right now this bearish engulfing candle. So the way I would think about this is that, I would probably think that there's a good chance that maybe we take another shot at breaking the 10, and then maybe we come down and test the 20-day, because we haven't tested the 20-day since the beginning of September. So it's quite possible we test the 20-day, and then we just have to see if we can manage to put together 1, 2, or 3 days below the 20-day where we're actually moving away from it. You can maybe start thinking about the market going lower, but until we get something more convincing, this is a very hard market to fight, and you really just have to stick with the direction of the 10-day exponential moving average, and right now that's still higher. It's really the same thing with the S&P. You do have what looks like a bearish divergence pattern forming on the RSI. That's very clear. You can see the consolidation that's really happening in it despite the index rising. Also, we had a bearish engulfing candle today as well. But again, it's the same story as the NASDAQ. We really haven't been able to get below the 10-day exponential moving average all that much. The 20-day has certainly not been tested very often at all. And so right now, the trend is still higher. And right now, the trend is telling us that, as long as we stay above the 10-day, I think you still have to favor upside. And you can see what I mean here by looking at the Dow. You can see the Dow the last 2 days has actually come right down to the 10-day and bounced right off of it intraday, right? That's what the longer candle wicks mean. At the same time, you can see the RSI turned lower. We don't really have the same type of bearish divergence. So again, you can see how this is acting as support. Until this breaks, I think you just have to continue to go with the trend. And the trend right now continues to be higher in all three S&P, all three U.S. markets. And again, if that trend breaks, and that's something, if you start breaking below the 10-day and then you break below the 20-day with some kind of authority, then that's a different story. But have a great rest of your week, and we'll see you again soon. Bye.